Good morning from Chicago traders. Sorry about the delay in starting here. This is episode number 2116. Derivatives trading is not suitable for all investors. It's 8:04 a.m. Chicago time on Monday, the 15th of November, 2021. Thanks for being here. Let's take a quick look at what we've got in terms of pre-market posture and positioning. The market is in a mild risk-on sentiment. The S&P is up 36 basis points, Dow 39, NASDAQ 43, and the Russell leading again, up 58 basis points. Europe's mildly higher. Crude's coming off. Crude is below 80. Talked about this last week that we're very likely to get back into the 79.80 handle on our way to 72 is what I had mentioned last week. Over the next couple weeks or so. That's the expectation. That's not a recommendation to trade, by the way. Gold, as you can see in the event risk or the general overview section, gold and the metals generally are rising pretty well as fear of inflation lingers, and so gold has pushed about $100 higher since last week. And although it's off slightly today, it's still up around 1865. Silver is strong as well, although it has pulled back a little bit. Copper had a bit of a pop higher. The notes and the 30 years, the 30-year bond, slightly mixed. One is higher, one is lower. They're moving separately. Crypto, Bitcoin futures back above 65,000 and Ether above 4,700 again. What's on deck in terms of key earnings? Tyson Foods, pre-market, Advanced Auto Parts, post. And again, gold/metals rally. China numbers better than expected for industrial production. China came out with some decent numbers overnight. Japan, however, had a weaker GDP. Japan had a weaker GDP. In addition, so it's adding to concerns there that they may go into stagnation again. There's also another COVID surge. I think, what is that, fifth surge in the Eurozone currently, Austria and other places. Need to keep an eye on that as it might have an impact on transports, airlines, things like that, logistics. Today, not much on the calendar. ECB's Guindos at 10:45 Eastern. Bundesbank's Bierman speech at 12:30, and the Reserve Bank of Australia at 7:30 and 9:30 Eastern. So that's that. Note the rotations have come in a little bit. The rotations are slightly smaller this week than last week. Very important in terms of measuring risk or measuring your stops and so on. The market condition today is actually not balanced anymore as we broke out to the upside. It is multi-distribution currently. It's a multi-distribution auction condition. There's price discovery going on. 123,000 contracts have traded. 100% of the overnight inventory is above the settlement price currently, and we have about 20.25 points of range. It looks like we may get some movement today, even though we don't have much on the calendar and so forth. Just pay attention here as we saw a reversal last week. We're going to jump right into the review segment. I want to start today with the composite profile, the composite profiles, the composite chart. What you see here is a yellow box. The yellow box represents the yellow profile that is shown to the left. The yellow profile shows what has happened between last week, which was an expansion week, new all-time highs, or 2 weeks ago, an expansion week, new all-time highs up to 47.1175 in the S&P. And last week, which was an inside week with one-time framing down from the Friday from 2 weeks ago. So all we did last week is one-time frame down and down and down. And we had an inside day on Thursday, and we broke. So if you go back to Friday's Trader Bite, we talked about how the fact that we had an inside day, and so the inside day triggers a caution, a directional caution, a potential for a reversal. The break of the high or the one-time framing down on Friday in the overnight session is a warning to shorts, and it was definitely on point as we broke higher and we pushed back to the key target, which was 46.72, I think at the time. Now it's 46.7350 for the composite point of control. The composite point of control, the most traded price in those two overlapping weeks, last week and the prior week, and we are above it. We're opening in a gap. We're at 94.25 currently, and basically we are on our way to potentially tackle this new all-time high again. So to me, it never got to the point of control the prior week, which was expected. If you recall, we talked about break of 54, 54 likely to take us to 33, which we got on Wednesday. And then I said that if it stays pressured on Thursday, we're likely to see 46.20, which would get us through the 46.25, which was the point of control of last week, of the prior week, 2 weeks ago. Keep mixing weeks because it's Monday. And so this pullback here is actually quite bullish in that it could not test the point of control from 2 weeks ago. It could not get down into the 4,600 after breaking higher. You can see here that we tested the 4,600 from below. We went to 4601. Then the following Monday, we came in, we opened just above, and we did a quick look-see, and we ran away. And to come back all this way without taking a peek at the interest at 4,600 is relatively bullish. So as I wrote in my head trader notes last night, preparing my homework in the head trader channel at Convergent Trading, I said that the fact that we ended up with a P-shaped profile on Friday, we broke the one-time framing down, which is breaking Thursday's high, and a clear reversal back up with a strong close. From here, we're looking for a test of 90, and then a push through 4,700, two all-time highs. The overnight session had a high of 46.9750. So this is well on its way. And I said, don't misunderstand this comment to mean that this will be done in a straight line. Markets rarely ever move in a straight line, although it did last month, just straight up. But this is what we've got today. If we manage to put in a lower high on this run up, and we have another reversal and the time framing changes, the one-time framing changes, and we start pushing, then we are likely to move all the way through the 4,600 handle down into 45.50. But that's kind of predicting, and I don't want to predict. I'm just telling you that this is very likely to break the high. There was a news item that we should have included in the pre-market summary sheet, and that is the cost of a container coming from the Pacific Rim into the U.S. has dropped 25%. So the inflationary cost of logistics and the bottlenecks are getting some relief. A lot of that is less interest in Asian products. People essentially pulling back a little bit. Companies pulling back a little bit. This is Friday. Friday opened just as expected. Choppy open, and then we managed to get an impulse higher right here managed to get an impulse higher. So it's about finding a pullback to get long. It clearly broke the opening swing high. It broke the IB high, uh, and it broke the prior day's high. And it was about getting long. So filter out all the short trades, short setups, look for longs. And I found it pretty tough to trade Friday because the pullbacks didn't give me a lot to lean against early on. And then once the European markets closed, I had too much to do elsewhere to pay attention to what was happening until the close. But to me, Friday's action was not, in order for me to put a trade on, I have to define risk. And if the structure, and it's not just some random risk, I need to look for structure, zipper, something to lean against, some area where the market is likely to see some support if I'm long. And I could not identify that on the first pop. This rotation up was 19 and a quarter points without an 11 tick or 12 tick pullback. That's pretty strong. And so there wasn't much for me to do here. So I don't think I took any trades on Friday in ES. So that's Friday. Here's your P-shaped profile right here. You can see that it moved away from the lower area from the prior value right here, and it pushed away and it held the top and it finished near highs. It's very bullish. That's not a move you'd want to fade coming into Sunday. So this is where we are today. We moved from balance right down here into imbalance, which is right here, into balance. And then we finished relatively strong. So again, the expectation is drift higher. Here's the reopen. We reopened right here, pushed up. We slid back towards the settle. We touched a prior settle, higher low. Europe comes in right here, and it's been buying since then. So we just made a high. I would say, and again, this is a multi-distribution profile, so active price discovery. So this is why I'm saying there's likely to be some activity this morning on the open. We have a pretty good range. We have okay volume so far at 125,000, but overall, pay attention to the open today. We want to see if it returns and revisits the 46.8350 Friday's high and sets up a base. The 80.83. So there's the 83. There's the 80. This area here is expected to provide some support right in here. So this would create a pretty decent opportunity to get long into 4,700, and then we would have just 11 points to cover, to 11.75 points to cover to push into new all-time highs. Okay. The reason for crude at 72 is that's the last composite volume, high volume node. That's the last major area of balance down there at 72. If you look at crude on a back adjusted price basis for rollover, the 72 area, I'm not saying 72 exactly, but the 72 area is the area that's expected to provide a test if it continues lower. So here's the overview chart on Edge Pro X. Again, you can get this on edgeprox.com. We pulled back to the monthly VWAP here across the board, and we're breaking away again. We're seeing it across all the indices. All the indices look to be moving in the same direction. Of course, the Russell has outperformed the S&P. I think it's up like 5%, the S&P 1.7% or something. So the Russell's been relatively strong and a leader, but pretty much everything's above its VWAP, also bullish. And gold has had quite a separation from its monthly VWAP to where it is now on these strong pushes higher. So we saw a big spike up on the inflation number, and it's holding on to these higher prices. So that's really something to watch. The bonds have just kind of been sitting sideways. I mean, they dropped, and they're creating a bear flag down here. The 10 years, weaker relative to its VWAP for the month. The bonds are stronger, but there's a fair amount of movement in yields. So let's dive into what we've got for today and have you guys move on. It is Monday, so there's a tendency to cover more on Monday as the week begins. By the way, just while we're here, for the week, the key figures, this is important, the key figures for the week, we have retail sales tomorrow in the U.S. Great Britain has at 2 a.m. Eastern, has claimant count and unemployment. Tomorrow we have U.S. retail sales at 8:30 Eastern. Balance of trade out of Japan at 6:50 p.m. Wednesday, the inflation rate out of Great Britain, housing starts and building permits out of the U.S., of course, crude oil inventories. And then Thursday, we have the inflation rate out of Japan, and we have GfK consumer confidence out of Great Britain on Thursday. And then Friday, we have Great Britain retail sales. So on a week-by-week basis, we had a pretty weak, we have very low scheduled event flow. This morning, here's what's key and what's expected. This morning, I'm looking for this market, since it hasn't given up the high yet, I'm looking for it to push into the 4,700. I'm looking for it to pull back, get us our overnight point of control stat, the overnight stat, and I'm looking for a visit to 83 before it consolidates into chop. I'm expecting this to get pretty choppy after the European close, and then I'm looking for a drift. Any pullback is likely to be bought, in my opinion, is likely to deploy more money. So we're looking for a breach of last week's high of 47.07 and potentially an attempt at the high, but I believe that today it's not likely to make that new high, but we'll see. It doesn't make a difference for me for my trading, but there's a plan for that. Any pullback into, again, 83 through 80 is expected to get support, and I'm looking to get long in that area. So I'm looking for it to go down, and then I'm looking to see the order flow push the floor, not make any progress, and get long there. Or if that's missed, look for it to bounce for a higher low, and then look for the order flow to be lifting at that point, shorts to be covering, look for the long back up through 4,700. That's scenario one. So here we're looking for 0007, and most likely that it would get quiet from 83. From 83. Let's turn on, hang on. There are multiple layers of this. Let's turn on our stock zone so we can get a map of what's expected. So there's the 83 down into 80 here, down into 80, expecting support. The secondary is an open that reverts back. We're at 100% inventory overnight, looking for it to revert back to 80, 83, push up, get into the 6,700 and above, 6,701 or so, and then consolidate and hold steady. So we have a higher high, higher low versus Friday, but sideways, quiet, markets and pause, and we're waiting for the next move. Good luck today. I know this went long. I apologize for that, but I wanted to go through the composite and talk about the reversal a little bit. Good luck, and I'll catch you tomorrow. Oh, by the way, there's an event that I'm hosting, that Convergent Trading is hosting, that I'll be talking in on Thursday at 1 p.m. It's about all the pieces you need to have in place to trade professionally. This is an important one. To register, go to ft71.com/trade-like-a-pro, as you see in front of you. This will be Thursday at 1 p.m. Eastern. Good luck. Take care.